When you're small, we have to be bold. I know that this may sound cliche, but when you're small, there's nothing to lose. You have everything to gain for. So you have to go for it. You have to go for something big. If you start settling for smaller, you become smaller and smaller. Ultimately, it's not your software that they buy. It's your confidence, the trust. That's important. So we need to make sure that we earn their trust, earn their respect, and give them the confidence that we'll be there no matter what. As an enterprise, we have adopted Claude, and we love it. The productivity has been super high, and I can see reflection of Claude. And I'm the last person to criticize anybody. The email was written by AI, or the document was written by. As long as it makes sense, it does not have any hallucinations. It is spot on.
Even today, it comes down to people. Everything you heard of this conversation, even though we're talking about AI and automation and how qBotica is, it comes down to people. The sales, the delivery, the growth, the employee. You got to put in the work, because the things that are easy and becoming easier are becoming less valued. And the things that are hard and harder are ironically the things that only people can do. Presented by Zapier, the AI automation company. Hello and welcome to the Small Team, Big Scale podcast, the show where we talk about how tiny teams with big ambitions are doing more with less, scaling smarter, not harder, and building big businesses with teams that could fit around a dinner table. I'm your host, Ron Schmelzer, and on today's episode, we're talking with Mahesh Vinayagam, who is the CEO and founder of qBotica. Hi, Mahesh. Thank you so much for joining us today on the Small Team, Big Scale podcast.
Hello, Ron. It's always a pleasure to talk to you, and it's an honor to be on this podcast with you.
Yeah, it's thrilled, and we go back a little ways. Mahesh,
Yes. Yes,
and I think it's fantastic. We interacted when I was at an analyst firm and a technology firm called Cognilytica. We were focused on AI, automation, and research, advisory, and education. And as part of that, these trends around AI and automation, they're not really new, right? I mean, you guys, how long has qBotica been around?
Yeah, qBotica has been around now, entering its ninth year, completed its ninth year, actually. And, you are one of the first analyst firms that covered us during our start. So we started out announcing that we put thinking inside the box. That was our, statement at the time when we started the firm back in 2017, because the bots at the time was a lot more dumber. So we wanted to obviously put thinking inside the bots, which was clearly our call out that AI is coming, enterprise AI particularly is coming, and how we will participate in that ecosystem, or more so how we wanted to kind of make an impact with enterprises when they start adopting AI. I'm so glad we are here in this time. There's so much happening. Great time to be talking, Ron, with you.
Yeah, fantastic. Well, let me sort of bring it to our audience, which may not necessarily be so familiar with all these terms. They may be thinking about, well, AI, it's only been around a couple of years. We've been using OpenAI and ChatGPT and Anthropic and Claude. Like, no, AI goes all the way back to the 1950s. But of course, it really wasn't made accessible and available to most people until very recently.
Exactly, that's right.
Yeah, but by way of background, let's talk a little bit about qBotica, because while you're here on this podcast, and why this is going to be very interesting to our companies and organizations who are trying to figure out how to scale with less. So you may be very familiar, of course, with AI now, chatting and prompting with machines. Maybe you're using agents, maybe you're using desktop tools, and you're just giving them a small bit of instruction, and you're giving them access to all of your data. Maybe you're giving them access to all of your keys, and they're going out there and doing these things automatedly or autonomously, I should say, with your, interaction feedback. Hopefully you're keeping enough of that human in the loop. But the roots of all this go back farther. And when I want to put two things into play here. We, of course, talk a lot about AI as intelligence systems that are trained on data that can do things that we ask them to do based on trying to understand really text, which is what they're primarily based on. These large language models have been trained on the universe of information. Well, the world of information, let's say. We don't know about the rest of the universe, but at least the Earth's based of information. And spots patterns in that data, and then uses those patterns to understand whether you're trying to code something or write some text or generate images or whatever you're trying to do. But there's also a set of automation things which are more about giving machines instructions, direct instructions on doing things, especially if you're trying to do things repeatedly. You can think of these more programmatic or rules-based or flow-based systems, right? This has been the world of automation that's been around, even, widely adopted within organizations, probably even more so than AI in many cases.
Right.
Now, qBotica, as an organization, is an award-winning enterprise AI and automation company that's helping organizations of all sizes operationalize these AI and automation systems, or agentic AI systems. We're giving these AI systems agency to be able to do things on behalf of other people across the systems and documents, workflows, and decisions. And they're serving large organizations, Fortune 500 companies, and government agencies. And what makes Mahesh's story compelling for our leverage-first audience is that he built this company delivering enterprise-grade AI to the world's large organizations with a small team at first. Now they're larger. Talk a little about how larger you get, and achieved hundreds of percent, like 335% revenue growth while doing it, and getting on the Deloitte Technology Fast 500 list, the Inc. 5000 list, recognized as a global partner with some of the largest automation firms like UiPath with Partner of the Year, and their new Qubi platform, which got my attention because I thought it was cute, and I got it right away. I'm like, qBotica, right? And I'm like, and it's very cute, very cute. And it represents sort of this evolution from what was known as robotic process automation, which was really more about that repetitive task automation. A lot of it was desktop style automation, to what is now becoming more truly autonomous AI agents. So maybe Mahesh, bring us up to speed, especially with what you are seeing within these organizations as you're trying to make these projects do high value tasks.
Yeah, absolutely. Again, Ron, maybe I'll take a step back to where I came from so that actually gives a good view of what I'm doing now, right? So I used to be working with a large outsourcing company for 20 years, worked with large enterprises, helping develop, millions of dollars worth of projects for them. So it was like big scale, lots of work. Some of them were IT outsourcing, some of them are technology outsourcing, the business process outsourcing, and so on and so forth. So what we have seen in these behemoth enterprises have so many layers of operations, and they exist for a reason, because they all, there's a way that they want to put some processes in place, and there are regulations that they had to follow, and so on and so forth. But also some of them is, to an extent, a lot of them are like legacy decisions and somebody had to carry on, because there's no logic to someone having 10 different core systems, like whether it's an ERP or whether it's a financial system. There are many versions of the same systems lying out there, but some of them could be a nature of acquisitions and all that. So we watched all of that from the sidelines. And when I wanted to start my own firm back in 2017, I had thought about three different ideas. One of them was data, social media, or AI. But AI was a distant thing because at that time, there were not, the enterprises weren't ready, the infrastructure wasn't ready. There's so many things that has to be in place for enterprises, particularly. AI was there. AI was there with respect to Tesla, the other several organizations have been working on it. And kind of like, I think, as the time progressed, we saw it during, so we chose automation as a step towards AI. And in automation, it was very effective when the rules were clear, when the inputs were structured and the path were predictable. But the real enterprise work is not that straight line. It is filled with emails, documents, conversations, lots of exceptions, and human judgment, incomplete information. All of that required a lot more than just connecting to layers, doing some process step automatically. That didn't help at all. So you needed a lot more understanding, a lot more context to everything, and not even if it's an email. If I did how to read email, not every email is the same. Each of them context differs for every email. So it was obviously it needed something beyond what software could do, and AI, particularly generative AI, became that magic wand that the industry wanted, because it was more it was able to understand conversations, summarize, and all that stuff. So beyond, thinking that and from a technology perspective, from LLM and all that, I would want to think about this as a simpler, as an assistant that is able to act like a human, think like a human. So at the time when we started, we were three people, around three people. I tell this story that one of the top automations company. It's not the one that you mentioned, but there's another one that was more older than the company that you mentioned, about 40, 50 years old. Um, I asked them for a partnership, and they were like, well, almost like they dismissed us as if you're somebody off the street, just doing this, three people. I'm not going to do that. But the impact that we made at a large top six bank. We went to and did a pitch out of a startup competition, just like one you're going to attend at AI4 Ron. At the same place, there was another conference called Money 2020. And that's a conference that we boldly went and displayed ourselves, and we won kind of like a startup kind of place. And so out of that emerged the pitch to this top six company bank in the world, not just the US. There was a Japanese bank. Their chief innovation officer was so stunned, and he was like, "What is that you needed?" And then we needed this partnership. I think we have got it. And So he said, "Okay, if there is an issue, let me know." So it was interesting that that company came through, a partnership with us. With the impact that we had with this particular meeting, the feedback that they had after that meeting and all that. So from there to about
Well,
200
that's actually a really good insight here. I think a lot of people like that. So let me just make sure I understand the story. So you were just like three people, right? Something like that.
Yes.
And you
Yes,
went to the Money 2020 conference, big show. Actually, now I think
exactly.
it's like even bigger now. Another
Yes.
big Vegas show. Vegas has all the big shows. And you were a startup company. And what were you showing at the startup competition? Was it like your automation tool that you had built on this platform?
Yes, it's called Intelligent Process Discovery. I
Okay.
think we still have that video somewhere on YouTube.
Uh-huh.
So we made it using $50 from on Fiverr, right?
Ah,
But right, we were, obviously we had to be a little bit more innovative. When you're small, you need to know how to use your resources, not do that. But it's, getting to Money 2020 was an expensive affair, and all of us has to go
yeah.
there, get that, participate in there. Even though it's startup, it is, we have to spend a good amount of dollars, close to, five digits that we have to spend to be
Yeah.
there.
Yeah.
But we made the choice because we knew that we belong there. We belong there among these large enterprises, and we needed to make those connections. So as when you're small,
Mm,
we have to be bold. I know that this may sound cliche, but when you're small, there's nothing to lose.
mm,
You have everything to gain for. So you had to go for it. You had to go for something big. If you start settling for smaller, you become smaller and smaller, right?
mm,
So and we would have been drowned in small work that we would not have time to dream and do that. So we made a conscious call that our first client, it has to be big. We will take small work, but we will not do small work to keep sustenance. So we will say, like,
mm,
we will decide about sustenance. We all decided 6 months is the time that we'll be able to sustain. And so we have given ourselves a time frame, a timeline. So if you don't do it, then we are done. Just move on if you are not able to crack anything within 6 months. So started in June. So our timeline was expiring. This was October when the conference happened, but we got that breakthrough after a 6 months time. Yes, so I think
So this
that was
bank,
important.
like this large Japanese bank, they saw the demo or they saw your pitch and they're like, I like this. I'm willing to give you guys a chance. And yeah,
Interesting. And I'll tell you
yeah,
this also, Ron. I think this is something very important. This story
yeah,
has to be told.
I love it.
They didn't choose because of the content,
Hmm.
because of not of the content that we delivered. Because actually, they asked us to do something different. I'll come to that
Mm,
later. But they were watching us. There was just like a 3 day or 4 day conference. These conferences,
hmm.
and all three of us got ready 7 a.m. We didn't stay at the big hotels there. We actually stayed at an Airbnb down the street. So we had to get up really early, pack everything, come here. And so we were there like by 7:30 a.m. We couldn't, before even anybody there, because we knew that there would be people coming for breakfast. So
Mm,
we had to start hustling when it's quiet. At the time, we don't need to meet all the 10,000 people. We just have to meet five people, all right? So breakfast was a great time. So we said, okay, we'll be there early, start splitting up, start meeting people, and then we come to our booths around 9 a.m., 10 a.m., and work the halls. We work the halls like crazy, work the
mm,
halls like crazy. And end of third day, this man calls me, says, "Hey, come here." And I'm like, "Yeah, yes, sir. I'm seeing you, last 3 days, talking to so many people. What did you learn?" And I
mm,
was telling him what I learned and stuff like that. And he's like, "Okay, good. So what do you do?" And then he said, "I do this process discovery for identifying opportunities for automation." He said, like,
mm.
"Hey, man, at our bank, we're not even started on automation. Why don't you just now come and start help me do automation first before you automated the process of identifying opportunities?" So I do have opportunities. I have lots of opportunities, but not have automations haven't worked so far well. So why don't you guys come and help me? So that's actually when we transformed to an extent. We were like a product
Mm.
company focused on process discovery. So we pivoted on that one conversation because we knew the impact that of working with such a large bank, and with such a leader. So he said, and I asked him, why did you choose us? And he said, the hustle. I need and cannot stress that enough. I have all the great companies, services company, you name it, they are my partners. But I don't think they will hustle out of their way to get me out of, if there's an
Yeah.
issue, if you have to call someone. So I think that's why I want to trust you. I saw you guys working, you had, and I've been watching it from the distance. So you had no way to like act, do it like in a presentation or anywhere that you would do a great service because I watched you here.
That's
So
interesting.
it's a great proof and validation. I think so. Put in the work and it will show. I think that's what I will tell any young company. You're gonna have to act up.
Yeah.
Just put in.
And we'll definitely get to the later story because the later story gets like even more exciting and interesting, and I want to hear all of that. But first, it's like when it's like, what made you decide to even go to that show? Because Money 2020 is very specific to like the finance industry, and you were coming out of the services. It's like, did you already know that this was an industry you wanted to focus on? Did you already have customers there? Like, what was going on there?
Yeah, so I did serve quite a few financial services company as part of that services
Hmm.
company. So a lot of my clients are financial services companies. So I knew that there would be people that I know would be there. So that will make things a lot more easier because when you're new, you don't want to be lost in a crowd. Like I didn't know anybody, for example, in the AWS reInvent. If I went there, I was not in the infrastructure side or the hardware side and all that stuff. So I would have been lost. So it made sense for me to be there where I knew some people, and then we can always bring it on. So sales is all about people, and so although it was not about AI, it still made sense because there were people that will buy automation at some point. And in that event, that's what we chose. We decided that we chose.
I love it. Well, this is great. This is a good story because I think people are hearing this and thinking, we increasingly talk about the roles of machines and machines doing tasks. We're going to get it more into that. But it's funny because it still always comes down to people. And if it
Yeah.
hadn't been somebody interacting with you and paying attention to you, one, you wouldn't have the company as your customer. But you mentioned this was a whole pivot for your organization. So let's get into that because that was the start of you focusing on automation and process and that sort of stuff. So, and I know things really have evolved quite a bit in the past 8, 9 years. I think it's been right.
That's true.
Mhm.
That's true.
Yeah, so let's continue. Sorry, so you started there, and I think when we met, you were very much focused on building the automations on top of these automation tooling. And there was a few vendors that were kind of like vying for space. You mentioned UiPath, Automation Anywhere. I think there was Work. I'm forgetting some of the names already, but anyway, there were a whole bunch of companies. Like Microsoft got into the game at some point, and I think SAP did something. But like evolve us to kind of where you are now, because there's been a lot of rethinking for how this works. And maybe I'm especially curious as to how your customers are rethinking what they might have thought about, with this automation. I'm wondering even if the bank that you had talked to might have had a different conversation with you today than they would have had back when they first met you at Money 2020 all those years ago.
Yeah, so I know. So this is the we chose obviously platform based approach at the time because of that particular conversation, and not because we were not capable of building a product on our own, but we decided that with so much investments that's going around, organizations had a choice, but they also had invested, so they had investments. So I'm like, as frugal as we are, we also have that for our clients. If they already made those investments, how do we actually now kind of really harness that and help them reach the goal? They all put in that investment to reach an objective of getting there. And how do I actually make sure we align our proposition with their goals? And that's kind of what we did. Right or wrong, there could be, I'm sure there is other side of that debate. We have to be what we want to be. But at 40 and to pay bills and with being an entrepreneur too late in their life and leaving a very comfortable job, I had only so much timeline. I'm going to talk to you about the timeline, 6 to 8 months that we didn't have revenue. So we actually thought that pivot will help us get there. So we then decided to do the services, and then we also did at the time itself, Ron, we started services as software, or at the time we used to call it, services as a subscription. So we started doing managed services subscriptions for our clients. We never said we'll price our work as a T&M, time and material, hourly basis. No, it's not a fixed price. No, we decided that we'll do it as a service. So that way I thought I will have some control, and also I can introduce software. So we actually included software and our services together through our partners and all that stuff. So it was a very interesting proposition that we thought of and we were offering. And now you see Palantir, OpenAI and Claude, everybody's now offering that. Forward deployed engineers are part of their software, and and services company are buying software. So, I know, Ron, and I'm not sure if you asked me, but several analysts used to ask me, are you a services company or are you a software company? When I said I'm a bit of both, they never agreed. They said that I had to be either, not both. But that's the case that's happening all over the world now.
Yeah, that's interesting. And, it does throw some people for a loop, and I want to dig into it a little bit, especially as we are starting making this transition now. People I think a lot of pricing now is up for rethinking and business models, especially now when we have a lot of consumption-based pricing. Everything is token-based. It makes it very difficult to predict. And that was even happening before AI, when especially the big movement to the cloud got a lot of people think like one day your bill could be $1,000, the next day your bill could be $1 million because all of a sudden some server went crazy and started consuming a bunch of cloud resources. The same thing can happen with token resources. We'll get into that in a moment here. But I want to get, for our people who are listening about this, let's dig into this model. So, of course, people a lot of analysts and especially a lot of investors like the product business because the idea is you can invest and build something once and sell it like 1,000,000 times, and you have these great margins. That's the theory. And so therefore, you can reap those huge margins when you're selling things over and over again. You don't have to deliver that service over and over again. So usually that's parlayed against, balanced against the services business, which, as you mentioned, is usually a time and materials basis. You're billing for your time, whether it's hourly, if you're going to do it that way, or maybe it might be like you may estimate that the project has a certain cost and you say, here is my fixed bill. And then you try to make sure that you don't spend more in labor and time than you got in revenue. But you sort of broke it down into, so of course we heard of software as a service, where it used to be a long time ago, you would buy the software, you'd own the software and it'd be yours. Now, of course, moved to more this rental leasing business where you're paying for software as a monthly subscription, software as a service. But now you've talking about sort of the flip, which is service as software, service really more as a subscription service. And so let's explain a little bit. So instead of saying, hey, we're going to do this project for you, it's either this fixed time or this fixed cost or whatever fixed basis, you're saying, I will sell to you for this monthly ongoing subscription. And how would you, so of course a lot of customers will be like, well, how do I know if I'm paying for this as recurring? How do I know that I'm getting there's a defined end or a defined delivery date? Maybe talk to us a little about the psychology in trying to sell a recurring subscription for a services business.
Absolutely, Ron. So it starts with understanding the customer's long-term initiatives, and and also our understanding of the industry as well, right? So, like I said, this is not my first rodeo. I've been, working with customers, helping them, develop software solutions for 25, 30 years now, right? So, um, we kind of have an appreciation of how this will evolve, right? So we kind of really go to a company and start first understanding the maturity of adoption. Whether it was at the time it was automation, now it would be AI, right? So we start with that. So kind of really start to kind of like understand where they are currently, and where they need to be, and where they can go, right? So it's kind of two things. Now, how to actually make sure their baseline is shifting to the current industry baseline, and then how do they actually innovate on top of it? So we can understand that. So, and also sometimes the clients themselves will say, I have, a vision or a plan to automate this department or these sets of processes. We have these ideas like 50 different ideas that's been logged across these different company, different groups, the different departments. Or they might actually say that I have, like, say, 200 plus processes that we think that will automate over the next 2 years, 3 years, and all that stuff. So it could be a variety of things. So if we kind of first, do that inventory, do that analysis, do that workshops, we actually ask them, like, can we talk to your head of finance, and your finance teams, your business optimization and process optimization teams, if your supply chain teams, particularly the supply chain optimization teams. So these are, HR teams. So these are the areas that we play in, right? So we are in the space of business operations. So it's finance, HR, supply chain, you name it, customer service, and so on, right? So our compliance, like, SOX is big. We actually automate a lot of SOX controls as well. So those types of areas, to an extent, InfoSec. So we kind of really understand, kind of really map where they are today. Then we decide, okay, I think they have prospect to automate, say, 300 to 400 processes over the next 3 years. But I wouldn't obviously go for it all, because we know change management, getting up, approvals and all that. Okay, let's just take a nominal number, like 33% of that. So let's say 100 processes. We'd say, okay, we know that these 100 processes exist to be automated, and we give them that value map. We have like great department. We know which processes. It takes minutes. You might think that this is going to take days. It might take minutes, because we're going to show them, hey, these are the processes we think you need to be automating, and these are the processes that the industry has already automated. And they're going to be, yep, 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 yep. They're going to just, press options. They select those buttons there. So, if we kind of really do that, then we'd say, okay, this 100 needs so much time, or this 2 3 year process. So I'm not setting yourself this exact 100 processes you're doing. That's not possible at all. So nobody can force you to do that. And then I'm going to say, this is the amount of processes that you'll be going to do it for the next few years. So this is your fee for every month, and I will manage when I have to bring my discovery analysts, when do I bring my developers, when do I bring my testers, my architects. So that's not, now you don't have to manage that. You don't have to manage that. Most of the times customers do on time and material. They say, okay, now the initial consulting fee, initial discovery fee, and then, okay, now build starts, and they're not ready, or the participating teams are giving some friction. The vendor still, charges them the bill. The meter is on, right? Still, if the work is they're getting done or not, and ultimately the client has to take the burn, because they started the project. However, in our case, we are actually kind of really aligning ourselves to the outcomes. So we have these number of processes, so we have to hit those marks. So this subscription works, really good. Not only for us. For us, it's it gives us stability as a company, and recurring revenues and all that. It also gives them a lot of security, because their bill is not fluctuating. They're not, going to pay for $300 an hour consultants in the first 2, 3 months, and then do go down like $30 offshore to do the bill and all the fluctuations. And now, if and the customers have to put in a lot more time on if the gaps arise and all that stuff. So there is no ownership when the hours are being given to the client. So here, full ownership on both parties, and it's easy for everyone to understand. One fee monthly, and you get it done. At some months I might do more, some months I might do less, but obviously we all have the target to hit, so we can actually flex. I can give my guys a week off without having to worry about if my delivery is going to be impacted, because I can then plan for it ahead and say, hey, we have done what we needed to be done. So now we can take a week off, and then we can come back again and pick it up. So it gives a lot of flexibility.
Yeah, I like that model. I love recurring revenue model. It's interesting because it forces you to rethink it. Is this something that you have to do that's pricing like customer dependent? Do you have like fixed pricing brackets? And are you finding that your customers are usually using less than they anticipated, or more than you anticipated?
I think it is. We have seen we've given very good value. Ron. I know personally, I would have preferred. I think sometimes we see that, oh, the 100 processes were so simple. We could have delivered more, so we actually given them more. In some cases, that have been too complex, but the customers also appreciate that because they're there right through the process. So they've never complained that, oh, you had to. You had to do more than what is you are contracted for. Sometimes they accept even less when we see that there are things that we do not anticipate come in. So it's a very collaborative process. It eases the pressure, Ron, on those. So I wish I had discovered that this approach much earlier in my life. It would have made things a lot more easier.
Yeah, you're really getting me thinking. And as was mentioned, like is pricing, did you standardize it, or is it custom on a customer basis? Or do you have like formulas or brackets or?
Yeah, so we do have some formulas, and also measurement approach. So based on complexity analysis, we do automatic complexity analysis using techniques like that's task mining, process mining, and also like SOP, harvesting. So we actually do all of that stuff. So there's a lot of LLMs involved, AI involved in understanding the context and all that stuff. And the next step is the way that there is a lot of factors, that risk factors, mitigation factors. Those are all part of that formula, Ron. So I think there is a method to this madness, and we think that we somehow have got this, and it has to be custom because every customer's processes are unique. It's not like when I say onboarding in Meta would be a lot more different than onboarding at IBM. So it's not like, hey, everybody follows the exact. They might use the same product, whether it's Workday, whether it's SAP, whatever it is, the HCM is. They might use the same HCM tool, but they might have totally different processes. So it is custom because the process is custom. It's not custom because I wanted it to be, wrong.
Makes sense. So let's get into the technology a little bit. So as you're sort of growing along here, are you just working with whatever the technology base your customers have, or is it you bring into place customers? I'm just kind of wondering what the relationship is between the services and the technology that you're working with, AI and automation.
Correct. I think that's a good thing. So what we have done over the years, we had actually said, I said, like, I will harness customers' investments in technology products. But to an extent, I also I didn't live in Silicon Valley or highly funded areas, and I didn't have several exits. I was just just nominal salary that I was pulling in to support the family. So didn't have a lot of financial grounding. So I had to kind of find a way. Do I get investors? Do I have the time to get investors, do the funding rounds and all that stuff? So I never had that luxury either. So we decided that we will use third-party platforms and start building assets on it, because obviously those platforms met the needs of customers, but there are all the unmet needs. So we, for example, one of the RPA platforms, biggest platforms that we work with, didn't have a document processing capability back in 2017, 2018. So we created a product called DocumentAI. right? So we said, okay, DocumentAI will work alongside their product and enhance the features, and it will help automate the document side of things. But the rest of the process flows will happen on that RP platform. So DocumentAI has some really good customers. Some of my customers celebrated 6th year renewals just last year. So there are such things that we develop as accelerators on top of our service. And then over time, we decided that we had to create our own product. And last year, we went and met this company, a very small company in Utah, loved their ambition, loved the breadth of work that they've already done sitting in their garage building the product. And we decided to acquire them. And now we are now able to, all that vision that we have, what we have seen in practice, we are now trying to put them, kind of address them through some frameworks and all that stuff. So it's a process. So we acquired them, less than 6-7 months ago. So the process of integration, redevelopment is happening at this point. So and then we'll be launching Qubi, QUBI, short form for our startup, our company name, qBotica, Qubi. So we will be actually putting them into this software. So that will be also a delivery mechanism, a platform that will encapsulate that. So yes, we are making that pivot from services back into software, Ron. But I would say, we will completely pivot. We'll stay on both of those lanes because, as you have seen in Palantir model, in the Claude Anthropic model, or all the forward deployed engineering model, I think we need them both.
Yeah. Well, this actually brings up a good point. So we've had some fantastic interviews. So folks who've been tracking this podcast for a while know that in the beginning, we were called the Exponential Scale Podcast.
Yeah.
The reason why we changed the name is people didn't know what we meant by exponential scale. And I was trying to also get away from the style of building a business where you had to raise a ton of money and hire a ton of people, sort of the venture I call the unicorn dreams approach, which works for some companies, but actually, honestly, it doesn't really work for most. And I think for a lot of companies, it's not even that available or accessible. Most people can't be raising the amount of money that some of these companies are raising. But in the conversations that I had, so we've interviewed Wade Foster, CEO of Zapier, Fabian Veit, who is the CEO of Make, Gina Bianchini, CEO of Mighty Networks, Emmanuel Strashnov, CEO of Bubble. We've had some great people on this podcast. And one thing that keeps coming up for the software, and I'm going to ask you because you're kind of getting to the software business, is it's becoming harder and harder to plan farther and farther out because the tool that you have might be fantastic. It's probably solving some needs, but all of a sudden, out of the blue, there'll be Claude, Anthropic will announce something or OpenAI will announce something, and you're like, oh, now I got to rethink everything because the model that we built or the tool that we built now is going to be superseded by something else. So how first of all, how far out are you looking? How are you planning? And as this is also this collaborative relationship with the customers might say, I need your product now. It's solving a product now, but maybe in a year from now, maybe their platform will include something that you're providing to them. So how are you dealing with this product planning in this crazy hyper-competitive market that we're in?
Yes, I think it's a great question. Great question. And that's exactly what we are actually planning. And, within the company, we call this qBotica 2.0. So we had to now think about how do we actually reorganize the company, for the new world and the new order, right? So I think it's evolving so fast that we can't have one way to solve this problem. So we have to think it through and make a structure that helps us, address the future in a more sustainable way. So we decided that we would actually reorganize ourselves into a flywheel approach, right? Because it's progressive. Each rotation accelerates the next, and so the further it goes, so the more force you give, the more it has to go. So we said, because the flywheel, so we started like 4 different parts of the flywheel. We said that we're going to have agentic labs. Agentic labs in qBotica will focus on discovery, will focus on finding those opportunities, AI opportunities within a client, and then can really give them the roadmap preparation, help them do custom development and all that, so that will reside within the agentic labs of qBotica. Then we're having the agentic operations, which will focus on delivering managed services that we are doing, including the human in the loop and owning the outcome. So if it's number of invoices, number of orders delivered, or number of claims processed and all that stuff, or even like number of tickets for automated maintenance and support, or like I said, SOX control, number of controls that we are able to, gather evidence and let them pass every year. So those are all managed operations. So they'll come into agentic operations. Then we have the agentic platforms. So we said the agentic platforms, Qubi will be a framework that will sit and work with all the models and all the software out there. So can work on top of Claude, OpenAI, Copilot. It can work with UiPath. It will work with Pega. It doesn't matter, SAP. So those are. It will actually have those integration frameworks. It will have voice content. It will work with Twilio. It will work with Amazon Connect. So that's kind of how we are looking at the platform as well. And so all these things, and then we'll also have the fourth part of that flywheel is the industry agents. We'll create specific agents, like there could be agents for dispatch, there could be agent for order entry, there could be a receptionist, there, a triage, it's technical world. Receptionist is a simpler word that actually takes information in. So there could be very specific agents that we can put in there. So labs for custom development, operations for end-to-end management, platforms for accelerators and software, IP, and industry agents for specific point solutions. So in this particular approach, we are thinking that each implementation will accelerate the next, and each of those groups will accelerate the next. So the flywheel keeps going. And one of the things that very big with qBotica is customer obsession. So we want to make sure the customer wins at all times. So I believe that this kind of an approach will prepare us and make us ready for the next few years, or at least next 5 to 6 years.
That's good. Well, that's looking farther out than many organizations are looking. So good for you. I couldn't tell you where we'll be in 5 to 6 years. But I have some thoughts, but I couldn't even guarantee anything. So
Exactly.
how big is qBotica now? So you started with just the three that we talked about. Now, of course, you're much bigger than three, and you acquired that other company as well. So how big
Yes.
is the team now?
So the team is about 200 people, Ron. We are still very niche, really focused on automation and AI. So and we do deal with customers directly. So it's a very focused niche team that we have grown.
Fantastic. 200 is even more larger than many of the organizations I talked to. Interviewed a company called Dato CMS, which is a headless CMS system. They're doing about $6.5 million in revenue with just 13 people. So,
Wow.
as I'm saying, we're kind of in this era now where leverage isn't determined by team size. It's determined by how well and how effectively you're maximizing the human and machine interaction. So let's actually get into it, because especially as you were growing, you were smaller than 200. You were somewhere between 3 and 200. And this is one of the things I think our listeners would love to get some insights in. So you're selling to healthcare systems and to banks, insurance companies, government agencies. These are organizations that don't usually typically buy from these smaller vendors. They feel comfort in working with these mega consulting firms. We all know the names, and big firms. So how does a team of this roughly anywhere between 3 to 200 people, how do you credibly get in there with an organization, sell and maintain these relationships, especially against some of these other players who are willing to throw all sorts of sales muscle at the customers?
Absolutely, Ron. It's, and it is like you make a very important point. And that's a challenge that we face every day, right? So we actually go against very large companies. These are multi-billion-dollar companies, right? So in context, I'm not like data OMS. It's not like 6 times. It's like, 18 times 13 million. That's not what it is, but because we do our, genre is a different type of execution. But that said, we're with limited resources, financial muscle, as well as I know all these companies like Google and LinkedIn visibility is also money driven. It's all pay for play. So to stand out against this continuous flow of money that flooding that these large companies do, they also flood these customers with, executive calls and, briefings and cruises and whatnot, right? So, we don't do any of this. How do I actually retain that customer? Great question, Ron. So it is tough. So the only thing that we can do is, as long as we provide value, we we listen to the customer, and we are there. It doesn't matter if you take them on a cruise to Maldives. It doesn't matter. But you are there on a Saturday evening when a production issue happens at the client end. Um, whether it's our fault or somebody's fault, we stay there. Okay, and even I get on that call, see, okay, what's happened here? This is major. Okay, production has stopped. Okay, I'm here. I'm with my team, and we are here to support you, and we can really figure this out. And it happened. Actually, I was about to get on a stage to do a talk in San Francisco, and I get this call, and I make a quick text to the CEO of the company. We knew that this was a software company that we work with. Like I said, we have layered on other software. Their software was down, so I texted them, and then I went on that speech. And then I came back. I already seen that some action was going on, and I stayed there at the back room, literally in the green room, working on that problem for the next 3 4 hours until it got resolved. We don't take that lightly. I think it's important that they understand. They know that actually, large companies know that. Ron, you think that they don't know, but small companies think they don't know. No, they do know. They do know, and so it's all about how you convince them. That first meeting, that first impression, that hustle, like I talked about, 3 days in a row, and money 20, that matters. And I think they see it, they feel it. And once they see it, then they're going to expand that. And
Hmm.
during the conversations, whether it's a first pitch that you are doing or a meeting that you're doing, what are you, doing to win the customer's confidence? Doesn't matter. You don't do. Now I always say, stop, vomiting acronyms. Start vomiting, stuff that does not relate to them. So talk sense, understand where they're coming from. Then, we need to be, building solutions and kind of giving them options and where could they go to. It doesn't have to be options based on us. What are those options out there? Be very agnostic, and give them a very independent view, and then see where it naturally fits in. So, and be grateful for the conversation that you had. I think that those are very important things, because ultimately, it's not your software that they buy. It's your confidence, the trust. That's important. So we need to make sure that we earn their trust, earn their respect, and give them the confidence that we'll be there, no matter what, to be with them and build, world-class solutions. Obviously, this cannot be done without engineers. So I have to do the same thing with my employees to win their confidence. Why would they bet a career on a company that they didn't even know, and that they wouldn't know, they wouldn't know if it exists. They are all like, they have their families, their future, all of that, reputation, industry reputation, all of that, the trajectory, all and momentum, all of that depends on which company they choose to. So we have to make sure that the employees' careers are also clearly mapped out. We give them value, give them visibility, take the time to meet with them, spend time with them. So a lot of work goes behind that, Ron. I think and they will then reflect the same with the customer. So it's a nice virtuous cycle that we have to be in all the
Wow.
time.
So it sounds like you invest quite a bit in that
Yes.
sales process, and
Yes.
that's something to be said. Smaller organizations need to realize that, even though especially when you're small, you're just going to have to put in more time and effort. And maybe that doesn't scale as much as just blasting out emails, which people feel like that's the way to do it. But there's so little effort there that if you can do it, anybody can do it. And I think it's kind of interesting. You're basically saying do the opposite. Put the machine down, put more time into it, invest in the relationship. It'll help you maintain the relationship, but also it'll help you. It sounds like it'll help you get in the door.
Right. Yes. See, it's thousands emails. If you get all 1,000 customers on the next day, you're not going to deliver it, right? So if you're a small company, so all you needed were that two people or two companies. So invest the time to map them out and seek them out, and maybe you can, instead of 1,000 blasting to 1,000 different companies, focus on 10 and make a measured approach towards it. That's what I'd say. But Ron, I say this, but I don't think a lot of my own people are, believe that. They do try to do all of that, 1,000 emails and try to do that, but it's peer pressure. That's what all these marketing gurus are telling them, right? Sales
Yes.
numbers game. Reach 10,000 people, you might hit one, right? But I think I'm a salesperson from a different era. I'm a challenger sales guy.
I don't
I'm
know.
not a
Things have an interesting way of coming full cycle.
exactly
Well,
exactly.
and keeping an eye on your time and my time as well, I have just a couple more questions and we'll get into our lightning round. We always have the rapid fire questions at the end. But I am curious a little bit more about Qubi a little bit and sort of how all this is coming together. I know the company you acquired as well. I think it was Automatica, I think it was called,
Correct. Yes,
and
that's right.
partnered with a company called Atolio. So in this era where all the AI companies are telling people that you can build whatever you want, you can vibe code anything to life. I've certainly built a lot of stuff that way. I'm sure you've certainly built that stuff away. There's this sort of like feeling now that it's becoming harder and harder to sell things on features, right? Because if you're missing a feature, you could just vibe, make it happen tomorrow, right? So tell me a little bit about Qubi, kind of like where do you see it, and what do you think it's doing for teams who feel like maybe they could just stitch things together with an LLM, maybe some internal team, because there's internal pressure now too to make more use of AI. So it's kind of weird. So you're not only facing competition from other services companies, other software companies, but you're also facing possibly internal competition from their own teams who feel like they can do stuff on their own. I'm just curious about that landscape and where Qubi fits in. Yeah.
Absolutely not. I think this is exciting. I think everybody can do this. Like I'm a top 10% lovable user. Would you believe that? So I actually do this for some nonprofits, some of my friends on the side. As a just as a service because they find it very difficult, and I can make these lovable can make this in minutes, and I can help them make something sensible within minutes. So a nice pastime on a weekends for me. But that said, you know, the key is somebody calls me and says, "Hey, that feature is not working on the website. Something is down, right?" Am I able to really take the time? Sorry, I'm actually on a flight somewhere. I'm actually working on this other thing. I did this as a pastime to you. As I didn't charge you anything, so I again did something for you. See, I think I'm kind of drawing a parallel here, Ron. All these vibe code stuff would be great, for the initial euphoria, right? I think there's a lot of things that we'll put in. I was just meeting with someone who's like a top, work with top companies. Just last night, you didn't believe that. It was the last business conversation I had before this podcast. And he told me this, that, hey, my client was telling me that he gets so many PRs, like the requirements, like the change requests, CRs, because now everybody's, wanting to, they're developing using coding agents. It's not they're taking the time. They're just using coding agents and, doing things in an hour or two. And now, who's going to prove all these things? Who's going to validate if this is actually hanging together? Who's going to confirm that this is what they're mixing is not affecting something else down the line, with these large organizations? So there's more to this story, which will unfold. And we will, as much as we want it to succeed, there are things that, I'm sure that if you don't, take precautions, it's going to fail miserably. We don't want that to happen. So what we are trying with Qubi is that building that integration framework, making sure that because the problem is in the integrations, problem is the orchestration, the evals, there is like a change management, impact management, all that stuff is important. I think how do you actually do those? I think that's kind of where our focus is, creating those enterprise connectors, understanding if you are actually, if, coding is just the least part of it right now, Ron. So that's not the biggest part. The biggest part is integration, understanding the overall domain and all that stuff.
Well, that's interesting and good to hear because this problem is coming up and all the different angles with AI. We're talking about here in terms of AI building products and solutions, and you're like, building is really easy now. The
Yes.
problem is managing it, integrating it, maintaining it. It's the same with content. For people who are in the content business, content is really easy now. So
Yes.
producing content's not the problem, but getting attention, retaining audiences and building something of value, that's even harder now because there's so much noise, it's harder to cut through the noise. So it's kind of all comes back to, okay, well, just imagine you can build something, anybody can build something, content, anybody can generate the content. How are you going to get their attention? How are you going to retain them? So that is really, really great. Well, I have one final one here before we get into the rapid fire here. And it's really more of your advice because I've been tracking for a while. You've been fantastic, building something, growing something, scaling something. As a business owner, those things are challenging, right? So
Yes,
maybe
yes.
for smaller teams who are sort of maybe doing something in a different space, but may look at companies like qBotica and say, hey, I want to be qBotica when I grow up, right? You might not have thought about it. You might be thinking as qBotica, I want to be like that company when we grow up, but they're looking at you as a success story. So maybe for those founders who were like running maybe a dozen person or less team, who's trying to figure out, maybe how they can sort of find that solution and grow, or maybe even looking at what you're doing in terms of agentic AI, and they want to implement, they want to use you or they want to work with you or find something, what advice would you give them in terms of trying to build something that not only establishes value, but can grow and scale in today's economy?
Yeah, I think see the important thing is like, obviously, confidence, in themselves. They need to trust, they have to believe in themselves first of all, right? So, that comes through in every conversation, like I said, whether it's an investor conversation, whether it's a customer conversation, it's an employee conversation, it's a partner conversation, right? So, or it's a family conversation, right? So, we had to have that belief. If you don't have that belief, I'm sure there's going to be a lot of questions that's going to arise in our mind. There's a lot of people that's going to question you, and they're going to challenge. So it is tough. So I've actually gone through that process of, doubt, self-doubt, whether this will succeed, whether we'll get that client, whether, we'll be able to do this. So I think it's important to stay grounded, believe in yourselves and have a set of mentors, right? So have people that we can actually share things. Sorry, I'm actually, like talking something different here. You're looking for frameworks, but I'll tell you, the founders are the key, and they, as strong they are, they can strong build a strong company. So, I'm learning this by experience. I'm not the strongest guy here, but I'm learning by experience and kind of really seek out help and having those mentors with you, not just for namesake, really, talk to them out. I'm sure they'll solve some really good problems for us. And the next thing is like, see, employees, that your team is very important, right? So actually believe in them, be transparent. Don't show them the moon and suddenly next day, tell them that they're laid off, right? So be practical and tell them what they're signing up for, and involve them in the process. That's going to be important as well. It doesn't need, like I'll tell you, it's not that everybody needs it, right? But they need equity. They need equity in participation, equity in decision making. They need equity in the solutions and choices that we are making as a company. It doesn't have to be the financial equity in the company itself. So I think that's important. And how you see them, don't, okay, I'll only talk to the next. I've seen some small companies, you only talk to the guy that's next in command and never talk to anybody else in the company. No, that doesn't work. You need to be involved with everybody, whether it's an intern, right up to people that are reporting to you. So I think having that conversation is important. And obviously with customers, be honest, tell them how we are actually wired, what really takes. So there's multiple aspects of this. But Ron, I'm not sure if I'm a success story. I did my little bit, and I think this is what I've done to get to this point. If you see that as a success, yes, those are the things that got me here.
Wow, there's a lot in there. So for our listeners, are going to compile this all together because starts with confidence. It's interesting. I like how it starts with confidence because if you don't believe in yourself and what you're doing, how can you ask anybody else, your customers, your employees, your partners, your investors, anybody? I think it's great. And then I think the rest about building those relationships internally, building relationships with the customers. This is great. I mean, this is and of course the last bit you mentioned was about mentors. So how did you find your mentors, and maybe what advice would you give to others who would love to find actual good high value mentors but are struggling to find the ones that are going to really make a difference for them?
So it's a process, Ron. So I'm sure, like, you would have to reach out to quite a few people and be ready to open up a bit more. And some of them stay with you, some of them would leave. So I would say like talk to 6, 7 people. Initially, there's probably you'll end up with 2 or 3, or that's all you need at the end. But then without talking to 7 or 8 people, you wouldn't land at that 2 or 3 people that
And what kind of
whatever.
mentors are these? Like people in your industry or people like customers? Like what kind of mentors are these for
See,
you?
I have, I have mentors that are probably introduced by others. I never met them ever in my life. But then when I had that initial conversation, the sincerity with which they were approaching the problem, the framework that they used and all that stuff, I loved it. And then I actually had a few more coffees, lunches and dinners, and then I started to like them. And they're actually, adopting them as my mentors. But then, or they adopted me as their mentees. Then I have others that are my ex-clients. I loved, how they were in the past. So and then they had moved on to do other things. Very interestingly, like I liked him so much, and now he's like a leadership coach. The top leadership candidate, and that's what he was destined for. And he got there, and he was doing all corporate jobs. So I had him as my mentor when he was doing these high flying corporate jobs. And now he's doing leadership coaching, and I believe that I feel proud that I was able to identify him as my mentor. That's why I also name him David Bishani as a mentor. But he had it in him, so that's why he's now doing this as a profession itself. So I think it's tough to identify those people, but it's going to take a process. So you have to keep looking for it. You have to keep looking for it, and there could be. I do not measure them on what they did. They didn't have to be past CEOs, successful, entrepreneurs or anything like that. So you could actually see what does it make sense for you, right? There are other mentors that I do have with whom I share some things. They may not have all the answers, but they will unlock my ability to find those answers myself.
Fantastic. I love it. We got into all sorts of stuff in this conversation. I think
Yeah.
this is fantastic. Well, I have the same 3 questions I always ask everybody on these podcasts because everybody has different answers. So we'll first start with the tools question because everybody always wants to know what tools you're using. So it's like, what is one AI tool or automation that you absolutely can't run your business without? The one that gives you and your team the 10x leverage every single week.
So right now, Ron, it's Claude. The last 6, 7, 8 months, we all love it. Personally, I actually love chat. Chat agrees with me all the time, but that doesn't matter. But I think overall, as an enterprise, we have adopted Claude, and we love it. The productivity has been super high, and I can see reflection of Claude. And I'm the last person to criticize anybody if the email was written by AI or the document was written by, as long as it made sense. It does not have any hallucinations. It is, spot on. Doesn't matter who writes it, what writes it. So, as well as the code stuff and all that, right? So I think that my team just swears by it, lives by it. So I think Claude all the way, Ron.
Yeah, Claude has definitely been the tool that's been coming up in all the conversations. So something to figure out. Increasingly, I'm using more and hearing more about the open models, especially some of the Chinese models. I have to say, GLM is not too bad, and Kimi is getting up there too. But we'll keep that for another conversation another day. So processes. So what is one system or process that you think that every leverage first team, the one that's trying to grow without just throwing more people and more money at the problem, what do you think that process they should have in place by the time they hit their first $1 million in revenue that separates the people who are truly scaling from the ones who are just grinding? They worked so hard to get that million. They'll have to work twice as hard to get that second million. So what would maybe is some advice you'd give them to something that they should either stop doing that they're doing now or something that they should start doing today that they may not be doing?
Yeah, I think, see, cash flow. I would say, I had still struggled with it, Ron. So it's not like I've mastered it because I'm going through that. I want to make sure that I kind of like tell all my, the early stage companies, from the start, do not, take your eyes off. You would think that, oh, I don't need that extra money. I could actually run this, but if you don't practice it, even if when you don't need it, it's better to do it when we don't need it. And having that practice is important. It's basics 101. I'm sure this has been in management books for hundreds of years since when business was a thing, right? It's been Philip Kotler and everybody else, right? Doesn't matter, but I think we all overlook that. I think that's very important. Have that cash flow, clearly have that, margins, even if it is small. Do not compromise. Have a structure for reinvestments, but clearly show that cash flow.
Cool. I like that. Cash flow focus. I like that. So, and then one final tip. So, if you can give one piece of advice to the founder who's running that tiny team, maybe within a big organization, or maybe that tiny team, small organization trying to build a new company who wants to scale, either one of them, maybe what's one final tip or advice you'd give them about how they could really grow and scale in today's economy?
In today's world, I think social media is important, visibility is important. But also, how we having the true stories, being honest to ourselves, being honest to our clients and customers matters a lot. So again, going back to fundamentals, then that will reflect in your socials. So create, you cannot, like you said, you can create great content, but you will not have the views, right? Because the great content, AI can do it in minutes, but if you have to have the views, you have to earn it. So by earning that network, having that ecosystem is important. So start putting the work to kind of, building that network around you, building that ecosystem, multifaceted approach. I think it's all old school, Ron, but I think that's what I will tell them, that in a noisy world, if you have to stand out, you have to be true to yourself and get that story, build that network, put in the effort to build that network.
Fantastic. Oh, this has been a great interview. Look at this, over an hour. So it's been a great interview. Fantastic. Well, I want to thank you again, Mahesh, so much for joining us, sharing your insights, your perspectives, your continued success. I'm really wishing and hoping and expecting great things from you over the next few years. That's for sure.
All right. Thank you so much for the time and for featuring me on this podcast, Ron. And wish you the very best for your upcoming conferences in AI4 and at what was the other one? Black Hat, right?
Black Hat.
So yeah. So I'm sure I love your energy. I feed off people like you, and so I'm inspired by your work as an entrepreneur as well. And you had made an exit, so congratulations on that. So yeah, I think let's be in touch. Thank you, and thank you for everyone that's listening to this.
Yeah, for sure. And maybe for our listeners, some quick follow-ups. Any sort of links or things that they should follow up? How can they find more information about you, your company, your product, Qubi, qBotica? Anything else you want to point them to on this show?
Absolutely. So qBotica.com is our website, and find me on LinkedIn, Mahesh Vinayagam. I'm sure you can flash that profile. It's something I'm big on LinkedIn. Almost respond to every message out there. And then our product is myqb.com. It's just in making. So the website might be still flaky because we've not released it yet. The product is not released, but and I'm not sure when's the timing of this podcast and how long, I'm sure like it's going to live longer. So I'll go ahead and talk about it, myqb.com, myqbi.com.
Yeah, so just to spell that, because it's not just the two letters Q and B, it's myqubi.com. And for those looking to spell qBotica, I will put this here in the show notes. And for those watching, because podcasts are not video, you'll see the link as well. qBotica, that's the letter Q, BOTICA.com. Well, as always, I always have a final mantra for all of our listeners. So here's your mantra for the week. In this era of machines, even today, it comes down to people. Everything you heard in this conversation, even though we're talking about AI and automation and how qBotica is, it comes down to people, the sales, the delivery, the growth, the employee. You got to put in the work, because the things that are easy and becoming easier are becoming less valued. And the things that are hard and harder are ironically the things that only people can do. So I think this has been great to hear from a great company like yours scaling. And if you love this interview with Mahesh, I want you to hit that subscribe button. I want you to leave a review and share with that founder friend who's still running perhaps a project or running around and trying to figure that, send 1,000 emails a day and hoping that the machines will do all the work for them. In this era, maybe that's not the best thing to do as a small organization. So I want you to think big. I want you to stay lean, and I want you to scale smarter. Small teams that scale big aren't the future, they're the now. If this episode has you inspired to learn more, hit that subscribe button, share it with your crew, and join the movement over at scalebrate.com. That's SCALEBRATE.com. Until next time, think big, stay lean, and scale smarter, because small teams have mega potential. And thanks for tuning in to the Small Team, Big Scale podcast.